Hey everyone, welcome back to Corporate Decoder. Ever wonder what happens when two financial giants decide to tie the knot? Well, let's dive into Capital One's latest filing about their big move to acquire Discover Financial Services and see if it's a match made in heaven or a recipe for some financial indigestion. This report is like a quick update, also called a current report, that Capital One sent to the Securities and Exchange Commission, or SEC, on April 18, 2025. Think of it as a heads up about something important that happened. The big news is that Capital One got the go-ahead from the government, specifically the Office of the Comptroller of the Currency and the Federal Reserve, to buy Discover. This means the folks who keep an eye on banks and money stuff said, okay, you can do it. This whole deal started with an agreement, basically a contract, back in February 2024. It laid out how Capital One would acquire Discover. Now, after getting the thumbs up from regulators, it looks like things are moving forward. If everything goes as planned, the deal should be finalized on May 18, 2025. Of course, there are still a few things that need to happen, like making sure all the conditions in that original agreement are met or waived, but it's looking promising. Along with this report, Capital One also included a press release, which is like an official announcement to the public. It probably says the same things we just talked about, but in a more PR-friendly way. Now, this part lists all the different types of stocks and notes Capital One has, like common stock and preferred stock. It also shows their trading symbols, which are like nicknames for the stocks on the stock market, for example. Their common stock trades under the symbol COF. They also have some senior notes, which are basically loans that Capital One has taken out and promised to pay back by 2029 with a 1.650% interest rate. As we discussed before, the joint press release confirms the regulatory approval and the expected closing date of the acquisition. It's all about putting a positive spin on the news. Let's talk about some potential problems. The report mentions that the deal might not go through if certain conditions aren't met. There could be delays or unexpected events that throw a wrench in the works. It's always good to remember that nothing is guaranteed until it's actually done. If you want to dig deeper into Capital One and Discover, you can check out their annual reports, Form 10K. Quarterly reports, Form 8K, filed with the SEC. You can find them on the SEC's website. Finally, the report is signed by Matthew W. Cooper, who is the General Counsel and Corporate Secretary of Capital One. This means he's officially vouching for the accuracy of the information in the report. Now, what does all this mean? Capital One is trying to get bigger by buying Discover. The idea is that by combining these two companies, they can offer more services and reach more customers. It's a way for Capital One to try to become even more of a financial powerhouse. But like any big change, there are risks involved. It's important to keep an eye on how this deal plays out and whether it actually benefits Capital One in the long run. So what's my take on all this? Capital One is clearly making a bold move aiming for expansion and market dominance. While the regulatory approvals are a major win, integrating Discover's operations and managing potential risks will be crucial. I'm cautiously optimistic about this acquisition, but it's definitely one to watch closely. If they can pull this off smoothly, Capital One could solidify its position as a major player in the financial world. But if things get messy, it could be a bumpy ride for investors. Thanks for watching. If you found this breakdown helpful, don't forget to like, comment and subscribe for more corporate deep dives.